Good afternoon. My name is Ishita Mittal. I am a second-year BBA student at York University, and I will be your host for today's event. Before we start this session, I want to begin by offering York's land acknowledgement. Although we aren't all in the same location, we recognize many Indigenous nations have long-standing relationships with the territories upon which York University campuses are located that precede the establishment of York University. York acknowledges its presence on the traditional territory of many Indigenous nations. The area known as Toronto has been taken care by the Anishinaabe Nation, the Haudenosaunee Confederacy, and the Huron-Wendat. It is now home to many First Nations, Inuit, and Métis communities. We acknowledge the current treaty holders, the Mississaugas of the Credit First Nation. This territory is subject of the dish with the One Spoon Wampum Belt Covenant, an agreement to peaceably share and care for the Great Lakes region. I want to extend a warm welcome to everyone who's joining us today. For those who are attending a Level Up event for the first time, the Level Up program invites alumni leaders to help new grads navigate life and work after getting their degree, covering subjects like professional networking, career development, and life skills. Today's session is titled, How to File Taxes in Canada for Beginners. If at any time you need help with this experience or have questions about the content, feel free to click on the Q&A button on the bottom of your screen, and our team is ready to help you. Now, I would like to introduce our guest speaker for today, York alumnus Ryan Chen. Ryan is a recent YorkU alumnus who graduated in June 2022 with the Bachelor of Commerce in Accounting and in December 2022 with a graduate diploma in professional accounting. He's currently pursuing his CPA designation while working full-time as a senior tax associate at PwC, working in both corporate tax and assurance services. Thank you for joining us, Ryan. It is so great to have you share your expertise for this session. This has been one of our more popular topics in our Level Up series, so I'm sure everyone here is looking forward to hearing from you. Without any further ado, let's kick things off, and the floor is all yours, Ryan.
Awesome. Thank you for the amazing introduction, Ishita. And everyone, thank you for being here and joining us for the presentation today. I'll start off by sharing off my screen. So let me just change this real quick. So I hope everyone can see my screen right now. Any thumbs up just to notify me everything is good. Awesome. Thank you. So welcome everyone. Today I'll be talking about how to file taxes in Canada. And this session is primarily for beginners. So any of you tax experts out there, I think this session might be too easy. But I'd like to start off by thanking everyone for joining again for today. And here is the agenda for today. So I'd like to start off by asking a few polling questions to everyone here in the session today. So are you a current student, a recent grad, an alumni, or are you from a different university joining us today at York? Awesome. So many responses. Wow. So we have about 55% people who are from recent grads, and then we have a few alumni as well as current students in the current pool. So thank you for joining. Thank you for answering a question. The next question that I have for you guys is have you ever filed a Canadian personal tax return before? And I see the question saying, okay, so 59% of you guys have filed taxes. So, and about 41% have not. So the poll definitely speaks volumes and says oh, you guys definitely have some kind of experience to file tax returns, right? Now, moving on to the agenda today. So today I'll be talking about the basics of the Canadian tax system, where I answer these questions where what are the tax returns? Why do we need to file one? And what are the Canadian tax rates that we should be looking to, right? And then I'll also speak about the various type of income sources, for example, your employment income, your self-employed employment income or business income, as well as investment income. And then I'll also move on to non-taxable income sources, which are as the name suggests, right? Incomes which are not taxable. And then also I'll talk about the different types of tax slips, the deadlines that we should be considering, the nature of tax credits versus like tax deductions. And then we'll move on to like the tax tools and tips that I would be sharing from my experience on filing tax returns. And I'd also like to start off with this quote by Albert Einstein, who mentions the hardest thing in the world to understand is income tax. And I would say this is definitely true, because in the world of tax, there is a lot of different interpretations in terms of like how a tax law is being laid out by the parliament. And there could be a lot of technical aspects where normal average people might not be able to understand. And there is like a lot of different tax laws that we have to follow, right? It is like very rule-based and the application could be different. So moving on. So what is an income tax return? Income and benefit tax return. So a tax return is basically a compilation of your personal or corporation income and expenses. And then it also tells you like how much taxes you owe to the government, right? And how much taxes you could be getting as a refund. So there are 3 different types of tax returns. The first one that we'll probably be majority focusing on is the personal tax return, also known as the T1 return. The second one would be a corporate tax return. The third one would be the trust returns. And there are 3 benefits, or not benefits, the 3 outcomes of filing a tax return. The first one would be when you file a tax return, you might not have to owe any taxes. So it would be a nil return because like you don't have any income or you only have just credits, right? The other one would be where you can obtain a refund where you normally would file a tax return and maybe you have like a lot of deductions used during the year, which would be higher than your income tax payable. And then the government would issue a refund to you for that amount. And the final thing that we all dread about is paying taxes, right? So if you guys have like a lot of income and you need to file it during the fiscal year of 2022, and you see like, oh, like my income is way too high, and you'll be taxed at like a higher tax bracket. So we'll go through the rates in a bit, but that would be the third outcome. You'll see on the right side of the screen, like this is the first page of your income tax and benefit return where you have your identification, your social insurance number, all the information that you need to fill out. This information is what the government would be looking for when looking at your taxes. And also they'll also be using this information for your verification purposes when you're contacting them through phone, and also when you're trying to access your MyCRA account. I'll dig deep into MyCRA in a bit. So a few pointers to be made over here is like, why do you need to file a tax return? Like, is it mandatory, right? Do we really need to file a tax return in Canada? The answer is technically no, you don't. It's like not mandated by the government to file a tax return, but it is important that you should be filing a tax return. And the reasons why you should be filing a tax return are here as follows. You owe income tax to the government, and the government legally requires you to pay that income tax, right? It's like the government's money that you should be like owing them for like providing like social services and healthcare. And then you also may want to claim a refund. So you know that you might have paid more taxes, or like a lot of taxes deductions were made during the year. So you want to get that money back. You may also want to consider claiming a GST credit, Canada Child Benefit, or Guaranteed Income Supplement. So the Canada Child Care Benefit, GST credit, and Guaranteed Income Supplement is based on income, are known as like income tested benefits. What that means is basically the government would assess your tax return and see like how much income you earn during the year. And if you fall in the lower threshold or like the lower marginal tax rate, then the government would issue these like refundable credits to you on a quarterly basis, right? So the next one would be to report income that will allow you to contribute to an RRSP in the future. So what that means is that when you report your income to the government would be, so you also calculate your RRSP contribution limit for the upcoming year where you can contribute RSP to your account. And then that could be used as a deduction for your current tax year if it is like after 60 days of the current year, or maybe could be used in the next year. You also want to carry forward tuition tax credits. A lot of us are students here, and we might have unused tuition tax credits, right? So if you're filing a tax return for the first time, one of the major things as a student, you would always have a tuition tax credit. So let's say that you're starting your university in 2021. You want to have your tuition tax credits to be filed also for 2021, because if you're not filing your tuition tax credits, you would lose out on those credit amounts, and you would have to re-amend, or like not re-amend, you would have to file a return for the prior tax year if it has already been passed, right? For example, if you did not file a 2021 return, you have to begin from 2021 tax return from that year up till now. So be aware of that. And then you may also want to carry out some of your business loss or like a regular loss that you want to apply to other years that you may want to file your tax return for. And one of the formal ones would be the CRA might have asked you to file a tax return, right? So if the CRA requests you to file a tax return, you definitely have to file a return. Otherwise, there would be like consequences and penalties. And finally, if you have a sale or like a disposition of any real estate or property, you would have to file that, your revenue and your proceeds, as well as the costs to the CRA, because you have to report that income, right, on that gain on sale of property. And here is the tax rates for both the federal and Ontario amounts. So you'll see that Canada is a progressive tax system. What that means is that as your level of income goes higher and higher, the tax rate that you will be paying will be higher, right? So, and then the way that it is calculated is based on the tax bracket. So the tax bracket here would be, if you're earning income between $1 to 49K-ish, so your tax bracket would be about 20%, right? Any amount over $49,231, you would be subject to tax based on the combined rate of 24.15%. So let's say that if you earned $50,231, right? And then your first $49,231 would be based on the tax rate of 20.05%. And then the next $1,000, which would be the remaining amount, would be taxed at the 24.15% rate. So this is a marginal tax rate that we normally look at. And this is the tax rate that you should be thinking about when you're like filing your taxes, right? And then this would be based on your taxable income, not necessarily your gross income. So be very careful and mindful about your gross income and your taxable income. Then now I'd like to move on to the different types of income that we have. So there are about 5 different types of income. The first one is very general. So employment income, this would include your salaries from a regular job, your commissions if you're working in a commission-based industry, and then you have your taxable benefits, right? So employers pay for your some of the benefits, and you do have to claim, and they put those on your T4 slip. The other types of income that you may see, it would be pension and saving plan. So you'll have your OAS, also known as the old age security. Then you have a CPP or QPP benefits based on like your province and region. And then you'll also have other pension income as well as RRSP withdrawals. The other types of income that you would have would be your interest and other investment income. This would include your interest income, from your like term deposit, your GICs, your bank accounts, as well as your capital gains, which is like 50% taxable. And then the taxable amounts of dividends from Canadian corporations. So any dividend income that you have would be also taxed. Foreign interest and dividends would also be reported on your tax return. And then last but not the least, you'll have like both employment insurance and other benefits, as well as your business self-employment income. We won't dig too deep into these ones, but it is very important to know that business self-employment income would be a bit more complex in nature, because you do have like certain deductions that you can claim as a self-employed versus a salary employee. So we wouldn't dig too deep, since like this is a beginner level session, but bear in mind that you might need an accountant for this, right? Because it could be very, very complex in that sense. And then these are the amounts that are like income items that you might not be you are not subject to tax, right? So these include your lottery winnings. So if you ever win a lottery, free, you don't have to pay taxes on that. And then if you have like gifts or an inheritance, you don't really have to pay tax. Other items would be your GST credits or like the refundable tax credits. So you don't really have to report those as income, right? Your GST credit, your childcare benefit, and then any other similar provincial payments wouldn't really have to be considered as taxable income. And then finally, you'll also have like payments from life insurance policy following someone's death that you receive, and any amount that you receive from a tax-free saving account or a TFSA, right? So any account, any interest that you accumulate, any sale that you have on mutual funds, any income gain would not go into a tax return if it's like under a TFSA account. So now I'd like to move on to different types of information, tax information slips that we normally see. So for most of us who have graduated and like currently working, the most common one you'll see would be the T4 slip, right? So the T4 slip would be your statement of remuneration paid, and it will also include all the different types of like income that you get and also your taxable benefits. T4A would be your statement of pension, retirement annuity income, as well as your other income, as well like scholarships. That's a huge one for current students who are still at York. And then you have your T4A, OAS, which would be your statement older security. So some of these may not apply to a lot of us since we are currently still not at that age. And then also the pension plan. So we also have T4E, which would be employment insurance, T4RSP, RRSP income that you receive when you withdraw the money from your RRSP account, your T4RIF, which should be your registered retirement income fund. And then you also have a T5 slips, which are like investment income, right? So any interest that you earn on your bank, which is not registered with a TFSA account, so those are like unregistered accounts, you would have to report the income on your T5, right? On like the issuing agency, like for example, TD Bank would issue you the interest income or the T5 slip, right? And then you also have your T5008, which is your security transaction. So if you're a trader, day trader, and then you sell, buy stocks, and then all of your gain or like gain on your dispositions would be reported into your T5008 slip. And finally, if you are like working in a partnership or like have a partnership with someone else, you would receive a T5013 partnership income statement as well for your income on the share of the partnership that you have with that business. The other relevant slips that you would probably see would be your T3 statement of trust allocation and designation. There are also capital gains in a T3 slip that I would like to mention. And then there's also your T2202 tuition enrollment certificate. So this is one of the most relevant tax slip that we would probably have as students or like recent undergrads, right? You'll be able to carry forward your tuition tax credits in the future years if you are not currently working for now. And then we also have the RRSP contribution receipt, right? So whenever you contribute to an RRSP account, and then you shouldn't be contributing more than your contribution limit. So you should always like receive a RRSP slip from the issuing agency, so your banks most likely. And then using that would be one of your documentation to support the deduction that you make during the current tax year. So these now from that list, I'd like to highlight the major tax slips that students should be paying attention to, right? Especially if you're working part-time and studying full-time at York, you would probably have a T4 slip because like you are earning employment income, right? And then you also have a T4A slip, which should be based on the scholarships or bursaries that you have. Especially also, you would also include your RESP income as part of your T4A slip. So anything related to scholarship bursaries would be considered generally not taxable. And then if you see an asterisk there, right, there is a caveat to this. So in order for it to not be taxable, you'll see like post-secondary school scholarship, fellowships, and bursaries are not taxable if you have received them for your enrollment in a program, if you're a full-time qualifying student. And if you're a part-time qualifying student, the scholarship exemption is limited to the tuition paid, plus the cost of program-related materials. So this is very important. So even if you're a student, it doesn't necessarily mean that you are able to claim all of your scholarship and bursaries as non-taxable. In these situations, some of your scholarship or bursaries could be taxable, right? And then the next one would be the T5 slip, as I mentioned. So your interest, dividend income. And then T2202, which should be your tuition and enrollment certificate. As part of your, when you pay your tuition, you'll also see the number of months which you were enrolled in, either part-time or full-time or both. And then since like that information is very crucial for you, for CRA to determine whether you're eligible for the full, like, would it be fully taxable or not, right? And then these are the major deadlines that you should be aware of for like filing a tax return in 2022. So February 28, 2023 was the earliest day that you can start filing a tax return. Since all the T4 slips like should be already issued, if not. And then you also have your April 30th deadline, which would be your normal deadline for filing tax returns. For the current year, since April 30th falls on a Sunday, the tax deadline, or like a tax filing deadline, and also your payment deadlines, if you have any tax owing, would be May 1st, 2023. For people who earn business income or are self-employed, or their spouse is self-employed, you would be required to file the tax return at a later period on June 15, 2023. But your payment still has to be made if you have any current taxes owing on April 30th, 2023, which would be May 1st because of the Sunday, right? So be mindful of the deadline dates, because if you have any taxes owing, I'll speak about the penalties in a bit. If you have any taxes or like tax owing, you should always make sure that you pay it on time. The reason why, if you file it after the deadline and have a balance owing, you would be charged like a 5% of your 2022 balance owing. And there would be also interest based on each month that you file that tax return late. And it could go up to a maximum of 12 months, right? So you have to be very mindful on filing the taxes. And as a moral of the story, you should always file your taxes before the deadline. So never file the taxes after the deadline. It's not good for you. Definitely, the government would be the most happy person in this scenario, right? You'll have to pay them more interest and they'll be happy about it. So here is like the details. I don't want to go through each and every like single point, but over here you can see, right, like 5% of 2022 balance owing. If you have like $1 million, that would be quite significant, for example, of that 5%, right? So now I'd like to move on to tax deduction and tax credits, and what's the differences between them. So a tax deduction is generally a deduction directly subtracted from the total income. It's not, it's very intuitive in a sense that whatever income you earn and then the deductions that you make, for example, if you're contributing to your RRSP, right, or you're paying for childcare expenses, these are directly deducted from your taxable income, or like total income, right? And this would also help you reduce the taxes. A tax credit, on the other hand, is generally amounts that reduce the tax that you pay on taxable income. It does not mean it does not mean it would reduce your taxable income. It would reduce the taxes that you have to pay. So it's a different concept, right? And this is mostly based on the marginal rate of a tax return as well. And then the most common credit would be your basic employment, basic credit, basic personal amount, your employment amount. And I'll go through a list of some common credits that you could see on the next slides. So over here, you have both tax deduction and tax credits. So you'll see a lot of them would be applicable to students. For example, basic personal amount on the credit side. You have your age amount, and then if you have a spouse, you would also have like spousal or common law amount. And then if you have any eligible dependents, which would either be your children or like maybe your parents who are old, like these could be considered as eligible dependent. I wouldn't go into the deeper definitions, but there are definitions for qualifications to be an eligible dependent, right? You also have your Canada caregiver amount, your Canadian employment amount, if you're like earning income in Canada, tuition amounts, which is a big thing that you would have as students. And then your tuition and education amounts would be there on the T2202 slips, medical expenses, donation and gifts, dividend tax credits, stuff like that. For your tax deductions, these are the more common ones I would say for students would be maybe your RRSP deduction if you're making a lot of income and you want to contribute to RRSP. So you can use that as a deduction and reduce your taxes. And then annual union, professional, or like dues. So these are like membership dues that you normally pay during the year. For example, if I'm considering to be a CPA, I have to pay professional dues to CPA Ontario, right? And you have to be very careful of this because sometimes the employers may pay for it. So you cannot really double dip or like claim it on the tax return again. So it should be included as part of your on your T4 slip. And then you also have any deductions for CPP or QPP contribution if you're earning self-employment income. And any other employment expenses would be your other expenses, for example, if you're working from home, right? So some of the expenses could be claimed as like home office expense. And then you also have like, maybe if you're using your phone to contact clients, like that could also be considered as an expense that you can deduct. So, but the only caveat would be that if you are claiming any of your employment expenses, you would have to file a T20, you would have to obtain a 2200 form. It's not required to be filed, but it is important that you have a copy of it and it's signed by your employer. The next non-refundable tax credits, like other examples. So I'd like to put some like numbers to show you how much amount of credits that you would gain. So the basic personal amount would be either 14,398 or 12,790. The reason why it could be either or is based on your net income, right? So if you look at the note below, it's based on where your tax bracket actually begins. So anything below 29% would be the higher amount of 14,000 of 14,000, and anything above that percentage would be the lower amount. And then these are other credits that you would see. A quick thing to note is that this is not the total amount of deductions you're getting. Be very mindful. It is a credit amount, and then you have to apply the marginal tax rate on that amount. For example, if you're earning a basic personal amount of, let's say, 14,000, right? And then the lowest marginal tax rate using provincial and federal combined, it would be 20% of that amount. So you will not get a deduction on the full amount. The credit is only based on your marginal tax rate of that amount. And then other refundable credits, like there's not a lot of refundable credits in the Canadian tax system. The major two ones would be your Canada Workers Benefit, also formerly known as the Working Income Tax Benefit. Generally for low income earners, like you'll probably receive you'll receive a payment from the CRA on the amounts on a quarterly basis. And there's also the Ontario Trillium Benefit, which combines like 3 credits to help pay for the energy cost, right? It also includes your property taxes that you also pay. So depends on your income as well. And then your Ontario Trillium Benefit will also be like refunded to you by the government. So now I'd like to move on to some tax tools and tips. One of the major things that I've seen people like asking is like, how much taxes do you owe, right? So one of the things that I always like recommend to my clients and also some of my friends that I help out with the taxes is like, are you able to try to estimate your tax like online? And then this, if I click on one of these links, for example, let's see if it works. I'll show you guys. But before I move on to that, I'd like to also mention some tips that you should consider like for saving your tax return. For example, you should be registering for your MyCRA account for My Account for Individuals. So you can like look into your tax information, for example, your TFSA contribution limit, your RSP contribution limit for the year, and make sure that you don't exceed those limits. You would also be able to access your tax information like T4, T5s, T3, any other slips. Also, even your tuition slips, you'll be able to access them. And then also make sure to use the autofill function on your tax software, right? So some of the licensed software with CRA, you'll be able to download and import the tax information directly from CRA. So you don't have to manually like type each and every number into it. And then you should always maximize your RRSP contributions, your RESPs and TFSAs. So RRSP contribution is the big thing, especially if you're a high income earner and you're from the mid to like a higher tax bracket, so that you always make sure that you don't really have to pay so much taxes at the date when you have to file the tax returns, right? And then be also aware of your principal residence exemption. So these rules apply to you when you're selling off your principal residence. And this is it's a major thing especially in Canada. If you're selling a property and that's considered your principal residence, you may not have to pay like any tax on your capital gain amount when you sell off your principal residence. And then I'd like to go back to one of the tools that I have, and I normally would use. You'll be able to find it once I post them. And then you have your different types of tax softwares, right? So you have both the free version and also the paid version. So these are the different types of tax softwares that you can use. If you're like a cheapskate like me, I would normally use the free tax softwares because I'm still a student. I used to be a student. So, and this might be very appealing to a lot of people, right? So these are like certified by CRA. So you shouldn't be worried about getting scammed, I would say. And then there's also the paid version where you can download the platform. So like for the paid version, mostly you'll see like you're able to file like a few tax returns. For example, TurboTax, it's like $15 for like 10 or 15 returns. And then you're able to download on your own personal desktop, right? So these are very like good softwares. Like you don't have to manually enter everything, right? Everything could be downloaded using the autofill function from MyCRA. And then you can estimate your taxes using these softwares. Okay. And then some stats from the filing years from 2018 to 2022, you can see like a huge majority of the portion of the people who file taxes are like doing it through online, right? Only about like 7% like still does it through paper, but like the numbers are gradually decreasing from 2018. And FMR is like a find my return thing. I think this one is done via your phone, but a lot of people have been switching to Netfile and eFile, which are online versions. And to put the chart into like a number, you'll see this on CRA's website too. So the return received by the filing method, right? So you'll see 51% is being e-filed, on like 43% is being net filed. So approximately about 94% is all online filings, and the remaining is either paper-based and filing return, which is like phone-based. And that should be it from my side. Before I pass it off and head to the Q&A session, I'd just like to share my screen on the estimate calculator to show you guys how it would look like real quick. So this is a PwC tax calculator that we have, right? I'm not trying to promote this because I'm working for PwC, and I don't get paid for this for promoting it, right? So this is just for general like knowledge purposes. So for example, if you have like taxable income of like 70,000, right? This provides you with a lot of information on like your tax, and they'll tell you like how much taxes you owe, like what's your after-tax income, and what would be your income tax percentage, like your marginal tax rate. So I find it very, very useful, and also like for people who have like dividend income, right? This table also breaks down what would be your dividend tax rate in terms of like how much you own, how much you owe to the CRA, right? So it really depends on how much income that you actually make, but this is some kind of a tool that would help estimate your taxes and make sure that you're prepared for the tax return, right? But yeah, I think that should be it from my end. Now I'd also like to introduce Professor Joanne. She used to be my back professor, also like the GDIP professor, and I learned a lot from her. So anything that I know about taxes is also coming from her. So she's actually the guru on taxes as well. So yeah. I would like to stop sharing my screen. And thank you for listening, everyone. Ishita, you're muted, by the way.
Oh, sorry about that. Ryan, thank you so much for this very insightful talk. Now we'd like to begin the Q&A portion of today's session. We would like to hear from you, our attendees. If you have any questions for Ryan, please use the Q&A text box to submit your questions. And I guess I can get started with the first question. Since most of our attendees are recent grads, this is something that most of them were interested in knowing. How would I file a tax return for tuition after graduation?
So you can definitely file a tax return after graduation, but I would not recommend that because like if you were to file, let's say that again, right, in my example, I said in 2021, if you were still a student and if you miss that return, like you don't claim your credit in 2021, you would have to file an amended return or like a new return, especially for 2021, and CRA would have to go back to that amount. But if you file a 22 return before, right, before your 2021 return, so your credits, you would miss out your 2021 credits. So it's always important to file the credits when you actually receive them. Like you should be reporting your tuition amounts when you receive that T2202 slip from CRA. So I hope that answers the question.
Yes, absolutely. Thank you for answering that. The next question would be the Ontario Benefit Trillium. Do you put in both rent and property tax if you own, or you only put your property tax and your mortgage payment as rent?
That's a good question. I would like to ask Professor Joanne to speak more on this.
Okay, I can't share my video, so but I'm happy. Luckily I can. My audio works. So the on-ben form has you inserting the rent you paid or the property tax you paid if you own your home. So it's usually one or the other. If you live in a student residence, because the universities don't pay property tax, there's a box and you're limited to $25. And then the computers at the CRA take that information and based on your income, give you the trillium benefit, which you get several times a year to make up for the regressive nature of property taxes and the HST. I hope that answers the question.
Yes, absolutely. Thank you so much, Joanne, for answering that. And I believe you can turn on your camera now. We have given you the access. Sorry about that. Yes, we can see.
Lovely. Okay, thank you.
Awesome.
So the next question we have for both of you, how often do tax credits get updated by the government? Example, in the past, you could write off bus or train passes. This has since been removed. When do these updates take place? Is it random or every 4 years or anything else?
Well, there's going to be a budget tomorrow, actually this afternoon at 4 o'clock. And so we'll find out about any changes to tax credits this afternoon. I don't think any are planned. I'm always surprised. Over the years, the government has tried to get rid of what they call boutique tax credits, which are useful politically, but probably aren't the best use of taxpayer funds. This is like the child fitness credit and the transit credit, which were used in the past, then repealed by Parliament because they thought the funds were better going directly to fund the transit system and fitness programs. Other credits that have existed for a long time change every year by indexing. And you'll notice a very large increase this year for all the index credits like basic employment, and that's because of inflation. I hope that answers your question.
Yes, absolutely. Thank you so much for sharing that information. The next question would be, if I live on campus in the graduate residence, is it the monthly rent considered tax deduction?
And the answer is no. All you get is $25.
How about taxes on crypto holdings? Do you have to file anything related to crypto investments?
Yes, the CRA has published quite a bit on that. And if you look at their They're write-ups on the Canada.ca website. Just Google cryptocurrency. You'll see all the rules. The CRA has been sending out lots of press releases on that.
All right. And what are the considerations for single income families?
So a single income family that has two spouses or a common law partner and maybe a child. There are all sorts of single income families, but I think a lot of people think of a single income family as two parents and perhaps a child. So, so for that type of family, both parents should file a tax return, even though one will have no income because they're single income. And the person who has the income from outside the home would claim the other spouse or common law partner as a dependent. So the person would get basic, dependent, and probably employment claim. You can't claim childcare, presumably because you have one spouse at home, unless there's a medical or other condition that doesn't allow that person at home to be looking after the child.
Got it. Thank you for answering that. And some of our attendees are also wondering, is there anything I should be aware of when filing my taxes regarding the interest I have paid on student loans or line of credit?
There's a credit for student loan interest. You'll find the form. It's if you have my CRA account and you use software to prepare your return, the software has all the forms and it makes it really easy to figure out what you should claim. But the student loan interest is eligible for a credit on your tax return.
Perfect. And if you bought a principal residence with the intention to live in it, but it is now rented out, is your HBP still eligible?
Probably not. You can find the rules again on Canada.ca website, but the RSP homebuyers plan is to buy a home to live in. And so I'm sure there's some rules about renting a home.
Mm-hmm.
And shall we file GIC investment on a T5 slip, or is there any way to upload the documents to CRA? Thanks.
The interest is reported on a T5 slip. One is given to you, the taxpayer, and the other is filed with the CRA. So you'll see it on the CRA website under My Account. And the beauty of that is if you've changed your address, you know, all the slips are there. And the other beauty, as Ryan said, was you can use autofill and it'll automatically input all the slip information onto your tax return if you use software.
Thank you so much, Joanne, for answering all these questions so quickly. This is allowing us to take as many questions as we can. And the next question is, if you have entered Canada in March 2022, but joined the program in September 2021, will I be eligible for the tax credit for the fees I paid in 2021?
So there's a government of, I don't know if I can share my screen. Let's see if I can. Well, yes, I can. I thought I had the webpage up. There's the government's published a lot of information for students and taxes. And the first thing to figure out is whether you are a resident of Canada, which there's a different definition for tax purposes than there is for immigration purposes. So there's a whole Canada.ca, you just Google students and income tax and look for the part about international students because there's a separate page for international students. A lot of our students here do become residents of Canada and should file tax returns. In your very first year, there's a spot on page 1 to indicate when you came to Canada, and you can start filing a return and recording the tuition you earn, and you'll be eligible also if you're a resident of Canada for things like the GST benefit and the Trillium benefit. So all sorts of good reasons to file your tax return. I think of it just like spring cleaning, something you do every spring.
Yes, thank you for answering that. Our next question would be for work from home claim. If you claim long form but have base salary and commission, which do we choose?
Can you say that again?
Yes, for work from home claim, if you claim long form but have base salary and commission, which to choose?
I'm not sure I understand the question. There's a T2200 form that your employer must fill out to attest to the fact that you're required to work at home. And there's two ways of computing your work at home deduction. One was introduced during COVID. It's right on the form, the T2200 form. And the other is where you, and this might be the long form that's being described, where you actually list all your expenses. When you work from home, if you rent an apartment and you have a workspace, you prorate your square footage and you deduct that percentage of your rent, utilities, etc., as well as supplies directly used. You could deduct a portion of internet and if you use your cell for business, cell phone costs, that kind of thing. That's all explained on the form. The CRA has actually done a very good job with their forms. So not only do you have great software that helps you do your return, you also have great information on the CRA website, which is part of canada.ca.
Yeah.
Got it.
And just to add on to what Joanne said, like if you look at your forms, right, there should be like a T2125 form, which is like where you have to fill out your all the information or deductions, their expenses for your self-employment income. So you should distinguish your self-employment income from your actual salary income. It should be a regular long form, is what I'm also assuming.
I see. Okay. So the question was about business income. I always tell people who have business income that they should get an accountant because you don't want to be missing deductions and you don't want to be doing things incorrectly, because if you do things incorrectly, then you might underpay your taxes and then you owe tax and interest. And interest right now is a very high rate because it's about 9% per year.
Got it. Our next question for you would be, if you have no income for a tax year, can you still claim union professional fees on the tax return for that tax year?
It wouldn't help you because your taxable income can only be zero. So I don't think it would help you. However, you should still file a return because it'll, if you fill out the appropriate forms, you'll be entitled to, again, the Trillium benefit and the GST credit.
Got it. And if you make a mistake while filling your own taxes online, how soon can this be checked or corrected by the CRA?
Well, if you use my CRA account, you can correct it online. There's a web page that tells you all the different ways you can correct an error, and I think there's 3 or 4. So, and of course, if you do it electronically on the CRA website rather than mailing in a letter, you're going to get it fixed a lot faster.
Great. And if we moved away from Canada in 2022, are there any specific documents we need to submit for our final return for the last year we worked in Canada for?
Yes, there's a CRA webpage on ceasing to be a resident of Canada, and it tells you all the possible implications. When Canada stops taxing your worldwide income, and any deemed dispositions you have to report. So for example, if you have a lot of assets outside of your RSP and TFSA investments and such, you would have a deemed disposition you have to report. No tax to pay, but there's a reporting obligation. And Ryan has put the webpage up in the chat. Thank you. There is quite a lot of information on the CRA website. And if you can't find it on the website, other good sources are things like H&R Block. The banks have good information on things like registered plans, RSPs, TFSAs, first home savings account that's starting in April, life insurance companies. So lots of information available.
Thank you, Joanne. And we have our last question for both of you. In your opinion, what are some tax credits that people don't think about claiming, don't take advantage of enough, or perhaps are missing out on?
I don't think there's been much of a study on that.
Yeah, that's a very good question.
I know when I used to work with students in a tax clinic, and there are tax clinics run on campus for students and low-income taxpayers and all around the city, the community volunteer income tax program. I know when I was working, I'd often say to someone, have you asked your doctor if you're eligible for the disability tax credit? And so particularly seniors, if they're having problems with mobility, eyesight, hearing, etc., they might be eligible for the disability tax credit, which not only makes them eligible for a credit, which is worth about $2,000, I would say, just rounding. It also makes them eligible to claim personal support workers, people who come in and help them dress, etc., and make meals. That can be alternatively claimed as a medical expense, and that can be expensive if you have to pay for it yourself rather than getting free services from the government. So I would say the disability tax credit.
All right, got it. Thank you so much, Joanne and Ryan, for answering all the questions. And that concludes our Q&A session. Thank you for sending all your questions. Ryan and Joanne, before we conclude today's sessions, do you have any final words to share with our alumni audience today?
Ryan, you go.
Yeah. First of all, I'd like to thank everyone for attending the event. I hope it was informative. And for people who have never filed a tax return, when I came to Canada as an international student, I never knew that I had to file a tax return. So you guys are doing great to attend this session. And also, I'd like to also extend my warmest thank you to Professor Joanne. We were working yesterday night to fix all the presentation stuff, and she took some time out of her busy schedule. So thank you, Professor Joanne, for helping me out. And this is my first ever alumni event speaking. So I was a bit nervous, I will not lie. And it was definitely one of the an amazing experience. So also thank you for alumni, all of you guys hosting these events. It's definitely beneficial for the students. You guys are doing great, and also an amazing job. I wish I knew all about this when I was still a student, but definitely I feel I would like to contribute more to these alumni events. And definitely for people who are an alumni, I would definitely encourage you guys to attend these sort of events, as it's definitely helpful. Thank you so much.
Thank you so much, Ryan, for taking the time to join us today. It was great hearing from you. And with that, we are at the end of today's session. We hope you found the information shared today very helpful. This marks the end of the Spring Level Up event series. Please stay tuned for more events like this when the series return in the fall. We also encourage you to join our LinkedIn group or follow us on Facebook by searching York University Alumni, and on Instagram and Twitter at YorkU Alumni. Feedback about this or any of our other programming is welcome and can be sent to one of our social channels or at alumni@yorku.ca. Thanks again for joining us today. We hope to see you all really soon.